Today's video is going to be, bro, how to build a dividend portfolio. I will guide you step by step through it. I will show you all the important steps so that you can start investing in dividends, or at least in dividend stocks, as quickly as possible and as easy as possible, okay?
Okay, bro, so the first thing that I want you to do is to literally write into Google, for example, best dividend stocks 2024, okay? This is the easiest part where you can find stocks. This is the easiest strategy, so to say, to find different dividend stocks. You know, this is what I use all the time, bro. Each month I go through the websites, I see what's going on, and maybe I find some interesting stocks, okay? So now that you've typed that inside, let's take a look at all websites that are on the first result page, okay? So we will literally open all of those websites here. And we will go through the stocks here, okay? For example, we start with this website. It's called US News, 15 best dividend stocks to buy for 2024, okay? So we go down, and what I want you to do, bro, is you go through all of those stocks. For example, you copy them. Let's say this one, you copy it here into the Google, you write, for example, chart, and then you take a look how it performs in different years, okay? For example, in 5 years, in maximum, then you see it's going up and down a bit. And based on that, you can quickly decide which stock is interesting for you or which is not, you know. Additional strategy that you can use, bro, is to filter stocks based on the sectors that you are interested in, okay? For example, for me, the sectors that I like are financial sector and real estate sector. And you might be wondering right now, yeah, why did I choose those sectors? The sole reason is because I see the potential in the long term, okay? Because people always need money. So that's why I choose financial sector, because financial companies work with money, and people always need houses. That's why I chose real estate sector, because people need houses. And I mostly invest into stocks that come from those two sectors, because I also understand those companies, I understand the sectors, I know what they are about and things like that, okay? So literally you go through all of those stocks, you see which graph is quite okay. You know, this one, for example, in maximum, so version, it's growing, you know, so that's a good sign, and so on and so on and so on, okay? Let's say here, Realty Income Corporation, that's one of the stocks that I invest in. So I already know that this one is a good one. Maybe Main Street Capital is also another company that I invest in. It's also amazing for dividends, and so on, you know. So when you pick your stocks, also, for example, here, Morningstar on this website, here you have those 10 stocks here. You go here to this website, Nerd Wallet. Here you have a ton of them. Look, Franklin, Angel Oak, International Seaways, and so on and so on. Then here on this website, the Motley Fool, you have even graphs here already directly, for example, for this stock, AT&T. Then you go a bit down, okay, IBM. You go a bit down, okay, see the stocks. I guess you have to pay. Here, time stamped, you have probably a ton of stocks, even the sectors you see, so that it's easier for you to filter. You know what I mean, bro. You go through the stocks, you see what sectors you are interested in, what stocks are interesting, how are the charts, and so on, okay? So you can basically quickly filter the stocks based on the chart here, for example, in Google. This is perfectly fine. You can see quite roughly how is it going, you know, maybe max. Okay, it's like that. 5 years, it's shit. But what I recommend you to do is also, when you find some stocks, let's take a look at Main Street Capital, okay? So you go, for example, to this website also called Macro Trends, and you search the stock here, because this website is amazing for stock research. I use it all the time to find various data, okay? So I will go Main Street Capital, and here you can also see the graph, maybe for last 10 years. Okay, it's growing, it's absolutely amazing. You go to financials, you just play with the numbers here a bit, you see the charts. Okay, it's growing, gross profit is growing, operating income, it's growing. Basically, go through all of those bolded bullet points that are in bold and take a look if they are growing, if they are falling, and so on. So you can also analyze the stocks, you know, based on my videos that I did in the past when, for example, on this channel where we analyze different stocks, you can take a look at what I'm analyzing there and then see in more detail which stocks are interesting for you, okay? As for me, bro, I like financials and real estate, so definitely Realty Income is working in real estate. This is one of my stocks, and Main Street Capital is currently my favorite stock. So of course, I like to analyze it constantly, you know, to see what's going on. But as I said, bro, go through all of those websites. Here you have ton of stocks. Maybe you will find one interesting ones. And then after you find your stocks, bro, it's time to allocate the money, okay? And for that, I made here a little Excel table so that it's a bit easier for you. And here I said that, for example, we have 1,000 euro budget. And the first thing that you should do when you allocate the money is to think about it. Okay, what stocks do I want to buy? Obviously, okay? So here I wrote, for example, 4 stocks that I would be interested in, which are Main Street Capital, Realty Income, Altria, and T. Rowe Price. All of those stocks, bro, are also on some websites here. You know, I'm sure you will find a ton of them because look, for example, 67 dividends, bro, that's absolutely crazy. Here you will find it for sure. Look at that list. So I assume that for the sake of this example, we will invest into those 4, okay? And here on the right, you can see a little cheat sheet that will help you to allocate the money more easily, okay? So as I said, bro, pick the stocks that you like, okay? Go through all of them, take your time, take a look at here, for example, the sectors, take a look at here on macro trends, how are they performing, take a look at charts, take a look here down also the competitors, look how many competitors Main Street Capital has, take a look at competitors, really do your research properly, and then it's time to pick the stocks, okay? So whenever you pick the stocks, never pick more than 7 stocks, okay? From 7 to 10, it's kinda okay number, but don't do a completely crazy portfolio because the more stocks that you have, the higher the chances are that one of them will fail, you know, because Peter Lynch, for example, he's one of the famous investors. He said that when you buy 7 stocks, the 8th one is going to be completely trashed. Or when you buy 6 stocks, the 7th one is going to be bad, okay? So, bro, keep your portfolio low, especially when you are a beginner, okay? And now you are wondering, okay, in our example, for example, we have 1,000 euros. And then the best strategy, if you don't know yet anything about the stocks, except that you want to invest in them because they have good financials, the easiest strategy is just to allocate your money first 25% per stocks, or in this case, because we have 4 stocks. If you would have 5 stocks, you would invest 20 per stock, okay? So basically, allocate your money equally between the stocks. And then in our case, that means we invested 250 for each stock. We have 5 stocks based on the calculation. And now it comes to the tracking performance, okay? So what do you want to do is to track the graphs, okay? And the overall financials and overall data, okay? So what you do is you go, for example, here again to Google, or you go to macro trends, and you take a look at the graph, for example, for the last 3 months, for the last month, maybe here last month, 5 days, whatever you want, okay? Track the portfolio and then decide which stocks perform good and about which stocks you are confident, okay? As a rule of thumb, bro, whenever you additionally invest money, invest in stocks that are between -5% and 5%. That's what I try to do because -5% means that the stock is generally okay, just at the moment it's a bit lower, okay? Because, okay, slips can happen, stocks can go down, nothing to worry about. But the stock that is above 5%, you know, let's say, that means that it's performing good, but it's still not overpriced, you know, because, for example, if one stock would be plus 20%, of course, I will not invest in it at the moment because it's way too expensive, and I will just wait that it lowers a bit, especially if it's a dividend stock, because I would get money anyway, you know what I mean? So try to reinvest the money back into the stocks that are between 5 and 5, okay, so to say -5 and 5. So let's say that we have now additional, let's say 500 euros, okay, that we want to invest. So what are we going to do? We take a look at here as a rule of thumb, okay, invest in stocks between -5 and 5%, okay. Let's take a look at Main Street Capital. Let's say that the performance was -3.6% in the last month. So should we allocate the money also here? I mean additional money. Should we reinvest the money here? Yeah, we can, because it's between -5 and 5. So yes, we can invest here. Should we invest in Realty Income Corporation? Yeah, we can, because it's minus around 3%. It's still good. Should we invest the money in Altria? Yeah, we can, because it's plus 3% and it's still between -5 and 5. Should we, based on the rule, invest in Tiro? No, because it's more than 5%. So at the moment, we don't want to risk it buying it overpriced. You know what I mean? So, okay, we have 3 stocks. So how much money we will allocate? So basically 500 divided by 3. Oops. Let's put that into number. 166 euros per additional stock. So here we will put, for example, is 166 plus that much, and here the same, okay? So we reinvest the money back, and then here is our portfolio allocation right now, the updated one. And that's basically it, you know? Then from each month to month, you track the stocks, you see how much money you get, you reinvest the dividends, you find new stocks, you sell some old stocks because they are not that good, and things like that, you know? This is just quick, simple portfolio management, bro. Everyone can do this. And now I didn't plan that at all, but now we can also take a look at how many dividends we would get, for example, here with Main Street Capital. I think that they have 5%, so we would get that much times 0.05. We would get 20 euros per year. In Realty Income, I think they also have around 5, so we would have another 20 per year. Then Altria has, I think, a bit more. They have like super high, I think 8% or something more dividend yield. Let's take a look. 8%, yeah, that's absolutely crazy. So we will put here 8%. And Tiro also has around 4, I think. Let's take a look. 4%, yes. So altogether in 1 year we would get that much money, which is around how much? 80 euros we would get in 1 year from additionally dividends, okay? It's not bad for 1,500 euro investment, not bad at all, you know? Okay, it's cool, but it could be better, of course, you know? Dividend portfolio grows automatically because you reinvest now those dividends again, okay? So right now here we calculated that we have 106 times 3 because we reinvested into 3 stocks. Oops, sorry. So now the good thing is we have 500 plus, bro, those 84 euros here. So we have now 600, almost 600 euros altogether reinvested in this portfolio. You know what I mean?
Okay, so now that you've built your dividend portfolio, now you found your stocks, you invested the money, you allocated the money. Now it's time that I give you some tips that helped me on this dividend journey, bro. It's absolutely amazing when you see your money grow, so let's go, okay? Basically, tip number 1 that I have on my little script here is that you should always reinvest the dividends back, okay? This is actually compounding effect, bro. When you invest all the dividends back into your portfolio, you are actually then also growing that reinvested money. You are growing your own money that you invested, and then also that reinvested money. And you will see after half a year, bro, I guarantee you, you will see that your portfolio is just starting to explode and explode and explode. You are getting so much more dividends, bro. You will not believe it. Right now it's the end of the month. It's 30th of May. So I will record a new monthly dividend portfolio overview, and I'm already seeing amazing results, bro. So that video is going to be fucking blessed, man. I cannot wait to see how my portfolio will develop. So yeah, bro, what I want to say, when you reinvest the dividends back, bro, you unlock this compounding effect. Because what does that mean? Okay, now you're thinking, okay, this is some nerdy expression, you know. Compounding effect actually means that you start to exploit the interest rate, okay? Because the interest rate will make your money grow, so your normal money that you invested, plus the reinvested money, and you will see that your money will start to fucking skyrocket, man, literally. Even if you have a small amount, it will completely explode, bro. I can guarantee you, because of that very same effect. Because schools and those broke professors from universities, they don't teach you that. But money actually grows exponentially, you know. That means that money grows like this up, you know, or this is your side. So money grows like this. At some point, first it grows slowly, and then at some point it just explodes, you know. So you are making much more profit in much shorter time, you know. Everyone can confirm that, bro. If you don't believe me, just fucking Google Warren Buffett compound effect or something like that, bro, and you will see that I'm saying the truth, bro, because every fucking investor is talking about that, okay? And teachers and other people taught you, they brainwashed you that money doesn't grow exponentially like this, but rather just linear. Same amount every day, same amount every month, you know? And that's just bullshit, bro. That's just fucking bullshit. So I'm talking about this compounding effect way too much, bro. Basically, rule number one, reinvest all the dividends back, because that will significantly speed up the whole process. That will make your dividends and your overall portfolio grow way faster, bro. The second point that I have on my little script here is to dollar cost average the whole portfolio. I made the whole video specifically about dollar cost averaging. You can watch it here right now. But basically, short, like that, the whole concept explained shortly is that you buy your stocks every month, no matter what happens. Okay, no matter if they are up, if they are down. Okay, you buy your stocks, you stick to it, and that's it. Okay, you are building one portfolio right now. Stocks will go up and down. That's completely normal, but generally stock market goes always up. You can take a look at many examples. Dow Jones, it's always up. Nasdaq is always up. SP 500 always up. Even fucking Slovenian stock exchange is always up. You know, it's logical, because markets develop, we develop, markets tend to always go up. So generally speaking, bro, you should have profit if you invest every single month or every single week in the same stocks, same amount. This is also confirmed by Warren Buffett and Charlie Munger, who unfortunately died, but this is confirmed by them, that dollar cost averaging is the best fucking strategy for beginners. Okay, so this is going to be the best strategy for you, bro. Buy your stocks on the first of the month, same amount, same stocks, same everything. No matter if they are plus 300 or if they are minus 50. If you picked correct stocks, if you made correct analysis, then you should be fine, bro. You should have quality stocks that will grow on the long term, bro. If you didn't do that, if you didn't do your research, if you didn't follow my advice, I'm sorry, bro. Maybe your stocks are going to be completely trashed, you know. But that's the thing. That's your own mistake then, because you should analyze the stocks before you invest into them. Otherwise, it's just gamble. It's just fucking gamble, bro. And we don't do that. We don't do that, you know. So basically, buy your stocks every single time, the same amount, no matter what happens. Dollar cost average them, okay? The third tip that I have on my little script here is that even though you have right now some portfolio, you have dividends, your portfolio is slowly growing, but you can speed that up immeasurably if you also invest additional money into it, okay? And what I mean by that is, if you are working right now, you can allocate, for example, 30% of your whole salary into stocks, okay? You get a paycheck on the first of the month, you immediately invest 30%. I also explained this concept a bit more here in this video here. Go check it up, how to allocate the budget from my perspective as I am a banker. Okay, I know how to manage money, so watch this. Okay, basically you make additional investments every single month. Whenever you get a paycheck, you invest a small amount. Okay, if you don't work, if you are a student, if you are in high school, then whenever you get money from your parents, invest half of it. Especially if you live with your parents, bro, then invest 80%, 90%. Invest the whole money that you get. Live a broke life at the moment, because you will see how much money you will get on the long term, okay? I have a fairly small portfolio of around 30,000 euros, and I can tell you, bro, that the dividends that I'm getting are amazing. Like, the money that I'm getting back is absolutely amazing. It makes me feel nice. It's not too much. I'm not a fucking millionaire yet, but I'm on my way. You know what I'm saying? And you can be the same, bro. Trust the process. Invest the money. Don't spend it on some useless shit, bro. Money mistakes in your 20s is also going to be one video that I will record after this one. So I encourage you to watch it as well, okay? And bro, with that being said, do the hard work. Click subscribe, join me on my journey through self-improvement and stock market. Join me, subscribe me if you want to learn something new from me, bro. I will gladly help you. That's why I'm here, bro. Learn from my mistakes. Don't do your own, bro, because that's just stupid concept, okay? Nah, I'm joking, bro. Do the hard work and see you on top of the world.